What's going on, everyone? Welcome back to the Modern Mortgage Show, where I interview mortgage professionals who share their stories and modern information about the industry. I'm your host, Rocco, and I'm thrilled to introduce my guest. His name is Jerry Avila, and he's a loan officer at Capital Mortgage Services out of Ventura, California. Jerry, welcome to the show.
Thank you. Appreciate your invite.
Absolutely. Thank you for coming on the show today. So why don't we start off the show? Can you just tell us a little bit about yourself and give us a brief introduction of who you are?
For sure. So I'm a mortgage professional, been in the industry a total of about, let's see, back to '04. So I've been in the industry for quite a bit of time. Worked my way up from forbearances and modifications and all that stuff when the market crashed back in '06, '08. That's where I really kind of had to earn my stripes, trying to help people stay in homes versus actually putting people in homes. And eventually evolved into coming in on, I would say, on working through Capital Mortgage Services, learning the industry as an assistant, and then eventually getting licensed as a loan officer. And I've been doing that since the last 3 years, essentially.
So you've been in the industry as a whole for about 15, 16 years now, but you've been a loan officer for about 3 years?
Correct.
Did you do any type of work before you got into the mortgage industry?
Insurance. I worked for Anthem Blue Cross for, God, I think it was like 5 years. And that was, it kind of taught me how to be patient and having conversations and how to get information, essentially, because I had to deal with seniors. That was my department, and working with seniors on both the PPO and HMO side. So I had to really learn to have some patience.
So
When
what,
talking to
what made
people.
you want to get into the mortgage industry when you were in insurance?
To be honest with you, it was, I just got laid off. They were transferring all business out to, I believe it was North Carolina or something like that. And essentially my industry was shrinking in California, and my department, my group, a lot of the individuals I worked with, we all got cut. And so essentially I had to look for another avenue, and I always felt like I was good at numbers, and I could kind of put things together. So troubleshooting is not one of my, how can I say this? It's not a struggle for me. I can time. Yeah, I tend to find a way around a situation, no matter how complex it is. So it's just about adapting,
So you're
being
good
able to
at
mold
solving
myself to.
problems.
Yeah. I try to be as best as humanly possible.
Yep. Awesome. So as a loan officer, so you became a loan officer about 3 years ago.
hmm
What made you want to get licensed? Was it just the
Um,
next
it said, no, it just that was actually the next step for me.
step?
I When I got into the industry, that's kind of what I wanted to do. I
Mhm.
wanted to come in as a processor initially, um, but I mean, for that job function, they wanted more experience, more knowledge on that side of it, and unfortunately, I just wasn't finding the job roles that I wanted. And essentially, I got offered a call from Capital Mortgage Services, and the same day I got the call, I interviewed basically 3 times, all within about a 3 hour span.
Hmm.
Everything just clicked. Everything was perfect for the fit. And essentially, I was able to meet with the owner of the company who was looking for an assistant. And thankfully, since he is one of the highest producing loan officers in the entire company, um, he's always one or two. He basically let me kind of learn off of him and see what tricks of the trade he knew, and really pick up a lot of the things that I know how to do today, and how to kind of get through a obstacle when I'm confronted with one.
Who was that again?
Marty Smith, he's the owner of
Hmm.
Capital Mortgage Services.
So he kind of took you under his wing and served as a coach and a mentor to you.
In a sense, yeah. I mean, ultimately, it was kind of. I'll be honest with you. His words were, "It's sink or swim. You pick it up or you don't, and run with it." And it wasn't like you get one or two deals here and there. It's like, no, here's like 10, go.
Mhm.
So it really forced me to learn quickly on my feet and really, uh, you know, really progress as fast as humanly
Yeah,
possible.
pick it up quick.
Once I saw that I could handle that, it was like, okay, so what do I have to do in order to take the next step. And he just asked me straight up, like, well, are you licensed? I'm like, well, no. Okay, do you have this license, the DRE? And I'm like, no. He's like, okay, well, we need to get you licensed. And the next step was he offered to pay for my courses and help me get my licenses at the end. So, I was, completely pushed right into doing it as quickly as possible, which was awesome for me because I was working at the same time. I had to learn to do both things at the same time. So I was having to multitask, having to manage his entire pipeline, while at the same time having to manage learning and really staying stuck on my computer for a good part of, I would say, 3 months. 4 months, and I mean, developed that into getting both my licenses, passed my courses on the first, on the first shot, and passed the exams on the first shot, and was able to kind of get right into the business. But the funny part is that I came right in right as rates started to skyrocket when the Fed started pulling out some of the money, some of the funds that they were purchasing mortgage-backed securities with. So it was a trial by error and trial by fire, really, experience.
Yeah, definitely. So, as a loan officer right now, and what we're going through, in the world, what are you doing to get past this uncertain period of time, this disruption?
Truthfully, I'm trying to do as much as humanly possible to advocate and speak to our community. I've created my own Facebook group, and it's called COVID-19 Support Group for Small Businesses. And it's also a place where I share not only the latest statistics as to COVID-19 and what's going on with that, but all of the changes that are taking place with the overall scope of what's going on with CAR, which is the California Association of Realtors, what realtors are allowed and not allowed to do. I actually took the time to create my own virtual tour of a caravan tour, but virtually, while VCCAR, which is our county's association of realtors, before they started to implement that role. So I was kind of the bridge for that. And it was just a way for me to be able to assist my realtor partners to still continue to conduct business some way, somehow, to keep a sense of normalcy, because obviously this whole thing has changed everything for everyone. And we try our best to facilitate access to information, the SBA loans, all of that information that can support our community and our realtors and our small businesses and the nurses and doctors in the area. Like today, I'm actually front loading a Starbucks card of mine, and I'm going to post it on my Instagram and Facebook to let doctors and nurses know, like, hey, anyone who's a frontline, person that works in either the police industry or in the in securing our county, and doctors and nurses and even clinics, all those people, I want to make sure that they have at least a cup of coffee, right? So I'm going to front load a Starbucks card and either have a food item or a coffee for free. Just take it, just show the card, scan it, done. And so I'm trying to do things like that to really just provide value to my community and make sure that they receive some sense of support, because obviously all of us can use it right now.
Yeah, that's really awesome. Really, really awesome for doing that. And, with what's going on right now, forbearance is a hot topic.
Yeah.
So can you explain to the viewers what that is and what you recommend with it?
Yeah, so right now it is a really hot topic. Unfortunately, there was a lot of information released by Mr. Calabria of the FHFA, and essentially, when this whole thing went down, it really put a lot of the smaller broker shops and the smaller retail shops into a spot of lose-lose, because when you make it so easy to just say, oh, all you have to say is that you're being affected by COVID-19 to qualify. There's no substantiating whether or not you actually are going through a job loss. There's no proof that you're having to, that you're going through any sort of struggle at all. You can still be working right now and claim that you're being affected by COVID-19, and you're guaranteed to receive the forbearance. Now, the forbearance and all in all is essentially a pause of your payments for 3 months or 6 months or 9 months or 12 months, whatever time frame they give you at the bank, or your servicer. So you call your servicer, you say, hey, I need a forbearance. They say, okay, no problem, here you go. What is it in regards to? You say COVID-19, all of a sudden now you're given the forbearance. Now that forbearance, the moment you call in, just know that has an effect on your ability to, if you wanted to refinance in the next 12 months, that's probably going to affect you in qualifying. You're not going to have an investor that's going to be willing to take that. Secondly, if you do use the forbearance, then after 3 months of that forbearance, whatever time frame they give you, right? 3, 6, 9, 12 months. After that time frame is over, on that fourth month, you're due for all 4 months. It's
Yeah.
not going to be a freebie where it's like, oh no, yeah, we'll just tack it on to the end of the loan. No, it doesn't happen that way. And then, so you go from that forbearance and then you have to extend it. And then you have to then request a deferment of the payment, which is not a guarantee because you have to show hardship. And if I recall going back to 2008 to 2010, working on that side, I can tell you right now, not very many are going to qualify because they have to show that they're still going through a struggle or that they actually had to lose their job. And so a lot of these people that took advantage of this and didn't have that difficulty, but yet spent all the money instead of saving it and holding on to it and paying their mortgage, whether it be in pieces throughout that time frame, those people are going to be affected because now they're going to have a credit impact on their credit report. And then what does that do? Well, for the next year, it's going to affect you when you qualify for any sort of mortgage refinance or purchase. So all of this has a trickle down effect.
Yeah.
So my suggestion is to clients right now, which I've done numerous lives for, is just explain, hey, right now, if you absolutely need it, use it. If you don't need it, don't do it because it's not going to benefit you. It is a Band-Aid. That's all it is. And essentially, if you're opening yourself up to the potential of just like damaging your credit, even though they're not going to report for those 3 months, they're not going to report it. True. They're not going to report it during those 3 months. But the moment month 4 hits, all the late fees, all the charges, if you do not make that all 4 payments all at once, it's going to go retro. All of it goes retro. It always has. It always will. So one of those things, that I kind of really focused on a lot was my previous experience in letting people know, like, look, I know you guys want this. I know you guys are expecting that being able to defer payments is going to be a huge help for you, but truthfully, it is not going to be your best bet if you're not truly in need. And if there's a way for you to apply for a refinance to give yourself a month or 2 off of making your mortgage payment, then do that instead. Don't jump at what they call the free money because it's not free money. It never will be. Nothing is ever free. Whatever government entity takes control of this situation is still going to have to make sure that people are following through with the after effects of it. So ultimately, you're going to pay the price one way or another. So, and that's basically my advice to most consumers.
So unless you absolutely need it, don't take it because you're going to owe that money down the road sooner or later.
Yeah.
Okay.
Or if you end up not being able to do it, I mean, you're going to definitely see some impacts on your credit.
Yep, absolutely. So on a more positive note, what would you say, I'm sure you've helped many people as a loan officer. What would you say is the most satisfying or rewarding thing about your job?
Truthfully, it's helping. So there's 2 parts to this. So one of the main focuses I have is helping first-time homebuyers, and that's always a pleasure for me. Just because you get to experience, and you're almost living vicariously through your clients when they're going through that experience, and it just brings you joy in seeing them being able to reach that goal for the first time. But in the same token, when I'm dealing with veterans, it's like I think of my family. I think of guys that are in my family that I've served. I think of the men and women that in this country that I've served that have already laid their life on the line for this country, and then come back and are trying to utilize their benefit. And then if they're confronted with any sort of obstacles because of who they're working with, the lender, the realtor, and they're not getting the best out of it, then for me, it's my responsibility to step up and say, hey, this is wrong. This needs to be looked at. Either pay your pain points or whatever the case may be, whatever the circumstances is. if the veteran is not being properly advised, I feel like it is my duty, my responsibility to treat them just like I would my family
Mm-hmm.
and take care of them. And so when I'm looking at those two scenarios, a lot of times you're dealing with first time home buyers that are veterans, and so it really allows you to kind of really get a good handle of feeling that joy of helping, because it really comes down to that. I mean, for me, it's about helping my clients and helping my partners. We're all a team. Escrow, title, the realtor, myself, my partners in the office. I mean, we're all one team. No matter what the circumstance is, we work as a team, as a squad. And at the end of the day, we're trying to do what's best for our clients, and being able to do that for people, I feel is a huge benefit to anyone that works with us, just because we really do take that wholeheartedly, because I do take it personal if I cannot close on a transaction either on time or just at all because of the circumstance. I feel like I failed because I could have done something differently. And so it's that whole thumb pointing versus finger pointing mentality. What could I have done differently? And so not that I've ever or not that I've done that a lot, but in my history, I think I've had maybe 2 transactions fall through, and and it was because somebody lost a job, or we just kind of got the ball rolling before the client was fully qualified, and that's only because that's how they wanted to try to do it, because the time frame was limited.
Mm-hmm.
So under those circumstances, you try to do what's best for the client, and ultimately, if you need to pump the brakes, and you need to advise in that way. And so for me, it's really giving that guidance and giving that hand holding process throughout the transaction for those people.
Yeah, and going back to the vets, I had John on my show yesterday. He's the director of VA lending at uh, Success Mortgage Partners, and he
Hmm.
basically goes around the country and has seminars where he educates realtors. And he said that the total amount of vets that are using their benefit is about 11 to 15% right now. He's trying to get that to around the 40% mark, but it's just insane because most vets don't even know that they've earned this benefit, um, which is absolutely blows my mind. He said a few years back it was only at 4%. Now it's about 11% to 15%.
Yeah, well, I mean, it's because of who they partner up with. I mean, it's if the lender is not savvy on the VA home loan, just like you mentioned, their focus is not going to be on doing the VA loan, because one, it's for them, if they look at it and they're like, oh, it's a harder loan to do. It's like,
Mm-hmm.
no, it's quite the opposite. If you just read, I mean, it's in English. So as long as you read it, you're going to understand what's next and what you need to do as an advocate. So if you're truly trying to serve a veteran, then 9 times out of 10, that VA home loan is going to be the best benefit for them, because no MI, right? For some, it's no funding fee.
Mm-hmm.
For some, it's that lowest interest rate that's out there. I mean,
Yep.
so no matter what, that loan is going to supersede any conventional or FHA loan 9 times out of 10, just
Yeah.
because of the MI. So, that's where it comes down to it. It's like you have to figure a way to make it work. And I mean, just because it's a VA loan doesn't necessarily mean that they have to come in with no money down. If they
Mm-hmm.
decided to, consider the option of an FHA, then why don't they continue to consider the VA loan, but just come in with money? I mean, at the end
Yeah.
of the day, you're only going to reduce the funding fee portion that you're going to pay because you're coming in with money. So all of that plays into it and helps that veteran really get qualified. And just like him, I try to do a Facebook group as well in regards to just mortgage scenarios, and I try to educate our realtor partners and our team in regards to changes to the VA home loan, changes to processing of the loans, especially right now with all of what's going on. There's a bunch of little if, ands, and buts of
Yeah.
little changes that are taking place. So we have to be able to mold and adapt to those things and relay that over to our partners, so that way we set the right expectation from the get.
Yeah, absolutely. Like you were saying, most loan officers, all loan officers offer the VA loan, but not many know it from top to bottom, inside out.
Yeah, definitely.
So,
And I mean, it's a struggle though, for real. I mean, if people give the bad advice, or they speak out of turn because they don't know it, they're just kind of going off of something they thought they heard on one of the Facebook groups, and it's like, no, sorry, dude, unless you're reading the guidelines And unless you're following through with understanding what's going on with the changes, then please don't call yourself an advocate. Please don't call yourself a veteran friendly company, because you're really not doing them. You're not doing them a good service by trying to tell them that you are, when you're really not. If you don't understand what's going on, and you're having difficulty even with an appraisal, and you don't know about Tidewater, and you don't know about the reconsideration of value, then all those things come into play, and that's what usually kills a deal when you're going through some of the non-experienced VA home loan lenders. And you know, I never throw dirt on anyone. If anything, I'll give everyone props, because in my industry, I think there's a lot of that cutthroat feel, where you have a lot of people like trying to bash on one person or another. And in my case, it's like, let's not bash, let's just educate. Let's encourage growth, because that's what's going to lead to a better industry as a whole.
Absolutely. 100%. So let's say that you were talking to yourself 3 years ago when you're getting licensed to become a loan officer, or just anyone starting out in the industry, any loan officer starting out. What advice would you give to them, or what tips?
Oh, dude, to be honest with you, it'd just be like, hurry up. The sooner you can get in, the better. And learn as much as you possibly can right from the get, because really, this is a great industry. I know a lot of people, when I would ask that question when I was starting off, it was like, well, as a new LO, what would you do? And they're just like, I would leave the industry. And it's just like, really? Okay. And everyone throws at you that dirt, that whole concept of like, oh yeah, most people coming into our industry, they don't make it within the first 3 years. If you don't make it, you're done.
Yeah.
They're out of this industry. And it's just like, and I can't remember the statistic, but it was like after the first year, how many loan officers fall off. And it's just like don't pay attention to that. Not more than anything, don't pay attention to that. Just hurry up and learn as much as you possibly can, and then start establishing those relationships well before you're even done with your exams, done with your testing and all that. Get that all out of the way. Get introduced to people. Start having those relationships. Start talking to them about some of the things that you have planned for your future, and build that cohesion with those partners that you're looking at trying to obtain. And then after the fact, once you're established, then you're able to then continue to expand that, and you'll start making a name for yourself. But ultimately, do everything you possibly can to learn as much as you can is in the shortest amount of time possible. Because the moment you decide to focus in on a particular product, take that time to learn it to its best of its abilities, of your abilities, and then move on to the next product, and then move on to the next product, and just pick it up as you go along. And then just be mindful, if you're going to be an expert in VA, make sure that you're subscribed to the circular, so that way you know what's coming down the pipeline. Make sure that you're constantly updating your handbooks, so you make sure that you're constantly pulling up every 2 weeks or every month, pulling up the guidelines, and making sure that you understand that, like, what things have changed, so that way you can implement that in your business. So when the time comes, you can always refer back. I like to like on my part, when I pull up my VA handbook, I'll put little notes. When I see that something has changed, I'll put a little notepad in there, and or that sticky, and then I type in the notes of what circular has what information, so that way I can always jump right from there over to the other circular and pull up that information and make sure that it's fresh. So that way I can, when I speak to a client, I know exactly what I'm talking about. I'm not making it up. And if I'm arguing with an underwriter, like I had to a couple of weeks ago, it's being able to say, look, according to the VA, this is what it says. And if we're talking about, it's English, right? Like we said that already. It's in English. So just read it. It's there. It's clear. So the next thing to do is now try to find a way to communicate that in a way that isn't going to be rude or aggressive, and then just give the information as fact, and then see what the underwriter says. If they don't agree, get the VA involved, get the phone calls going. So, there's a bunch of stuff that you can really do as a newbie to really do yourself a lot of good. But knowledge is everything. Knowledge is everything, because with knowledge will come growth, and with growth will come that money flow.
Yeah, so just be like a sponge and absorb all as much knowledge.
Everything you can.
Okay, awesome. So last few questions here. Technology has made its way into the mortgage industry, and it's impacted it. It's definitely impacted it. So how would you say this has affected you and your business?
I have to say that as I came in, I kind of felt like that was what was lacking, even in our office.
Hmm.
It was one of the things that I kept pushing and saying, "Oh, we need to get more technology. We need to get more opportunities for us to be able to use to help um, have partners understand what it is that we do and how it is that we can help them." Um, I myself, I mean, I've been known to pay for programs and things of sorts to help my business and test it out. I mean, that's all I can really do is test it out and see what works and what doesn't work. And if it doesn't work, then I cut it. Yeah, it's a loss, but at the end of the day, that loss still allowed me to learn something and ways of implementing other tools, other habits that have made my transition smoother.
Hmm.
Video was something that I started over 2 years ago, and I would start and then start and then stop, and so that was one of those things where I kind of had to really hunker down, especially after this whole thing went down with COVID-19. That I said, okay, I mean, there's no excuse now. I have to get, and even if that means daily, I'm going to be on somehow, some way, whether it be a post, a live feed on Facebook or Instagram, creating my videos and posting them on YouTube, and then sharing them on my social media platforms, getting my Twitter account to show some activity, and having my LinkedIn all mixed in. I mean, all of it comes into play. The more that you can stay in front of your consumers and the more you can stay in front of your partners to develop that rapport and that trust, then better for you as a LO. So I mean, for me, it's been that's my way of growing. If I can reach more people, that means I grow. My team has grown because of it as well. I have three partners. My partner Juan Jimenez, my partner Jonathan Mercado, who's our coordinator right now, and Art Hernandez. And Johnny is probably closest to getting that final stage done. And we're actually starting a podcast officially next Thursday, or yeah, next Thursday at 2 o'clock. So we're still working out the names and all that stuff, but yeah, I mean, that was one of the things that we discussed. It's like, let's start a podcast. Let's
Hmm.
invite realtors and talk to them about habits and what they do to grow, and how can we help, and things of that sort. Just because ultimately that's what's going to help us grow our business, and make sure that we're providing the best we can for our partners and for our clients.
Yep, absolutely. And like you said, consistency and commitment to it is key. If you stay in front of them now, you'll think yourself about 90 days down the road or sometimes sooner, but you gotta look at the long-term game. And last question here, where do you see all of this going in the future in terms of technology and in how it impacts the mortgage industry specifically?
Well, I know a lot of people have this thought that technology would eventually take over the face-to-face business.
Mhm.
I don't think it ever will, because at the end of the day, people still want to talk to people, uh, especially when it comes to buying a home. Uh, you're going through a huge life choice. So to do that just remotely, yeah, there's some people that are okay with that. But for the most part, most people want to know that they can trust you, and they feel like by being in front of you, even if it's in a Zoom call like right now,
Mhm.
those are things that we do to facilitate that trust, and know that, hey, look, I know we can't meet in person, but this is how we're meeting for now. And then in the future, we'll meet in person, but they can at least see your expression. They can see that your posture, the way you carry yourself, because ultimately that speaks volumes to them. So technology will always have a place to
Yeah.
help us elevate our game, but
Yep.
it's never going to take over. You
Mhm.
have to be a huge proponent of using technology, but at the same time, not being technology dependent, let it be a vehicle for it to drive your business further.
Yeah, so basically using technology to help you instead of the other way around. And I agree with you. Technology definitely makes life easier. It allows tasks to be streamlined and automated, but there will always be that human element to this industry,
Right.
100%. Well, Jerry, I really want to thank you so much for coming on the show today. I had an amazing time talking with you, and I really, really appreciate your time.
Yeah, thank you. I appreciate your invite, and I was really looking forward to it. So I truly appreciate your offer of coming on.
And thank you to all the viewers for tuning in, and we'll see you again for next episode.